Alrighty, guys, we are back. We are back. So, alright, I hope y'all was able to get back on the live. Yes, yes. Seeing a few people come on in. Perfect, perfect. Okay, so first thing, we're gonna let a few more people get back into the live. We're gonna let a few people get back on in. And where y'all calling from? Where y'all calling from? We're gonna let a few people get in the live. All right, we're gonna start, y'all. So, what I came to talk about today was, hold on, give me 1 second, y'all. I gotta pull up my screen. OBS. So the first thing I wanted to talk about, is going to be how to, fund a business that just started, right? So when we talk about funding businesses, there's a few things that you got to understand off top, right? First things first, when you funding your business, right? When you funding your business, there's a few things you want to do, right? The first thing you want to do is you want to structure your business to where your business is, it's fundable. Like literally, you have to be fundable, right? So the first thing that we have to understand is when you have a business, right? I'll give you a perfect example, like Walmart. Walmart is a business that has a phone number, right? You're not hearing Sam Walton, I think that's the dude's name that owns Walmart. You're not calling Walmart and you get right on the phone with Sam Walton, right? So first thing a lot of y'all are you're doing that's getting you denied, right, is you do not know where to get a phone number, right? So get a 1-800 number, right? I'll drop, if you want, you can DM me for the free business checklist, and that'll get put y'all in position, right? That literally gives you everything that you're gonna need to do when it comes to building your business credit, or even just getting access to credit for your business, right? So the best thing that you can do is get it, like I would recommend to get it done beforehand, right? Before you get your LLC, right? Before you decide to you know, go try and apply, right? Always make sure you got your LLC set up before you apply, of course, but you always want to get your EIN number. You want to get your business address. You sometimes you might need your business address. They might ask you for your LLC, but for the most part, you can get all this stuff before you file for your LLC. Because when you do go to file that LLC and you go to file that actual paperwork with your Secretary of State, most times they're going to want to see your business address, EIN number, all that stuff already, right? So with that being said, like that's just one thing that I see a lot of y'all just not having, right? You don't have a business phone number or even a business address, right? But here's the thing, right? I know a lot of y'all be scrolling on Facebook, so is everybody, right? When you see things like Regis, when you see things like Opus, all these post I post to one, right, and you see these virtual addresses, you have to make sure that they're not able to get flagged, right? What I mean by that is basically, if I have a business and I'm trying to get a business address, the banks want to make sure that I'm who I say I am, right, or I'm where I say I'm at, right? So if I most of the time am going to get that generic business address, right, what it looks like is, and we already talked about not having no PO boxes, right, but what it looks like is it's literally going to be called a virtual address. So they look at it and they can see, and like I said, everybody's scrolling on Facebook, right? So when they see that virtual address on there and they look it up and they say it's Regis, that's another reason that you may be getting denied. It's just, in 2026 there's going to be a lot of cracking down on, what people want to see, right? So that's going to include your personal credit score. Trump just passed some laws that's stating that we are now going to, after such a long time, really be able to report our rent. We ain't going to have to go to kickoff anymore. Like, these are going to be things that are going to be on our rental report, on our consumer report, period, right? And they should be on there anyway, right? Because they're more predictable. Like, for example, if I'm like, versus your car and your mortgage, right? Most of the time you gonna pay your mortgage, right? So those are things that are more predictable than whether you're gonna pay a credit card, or they just passed laws to where now your subscriptions are gonna be in question, right? So if you're paying your Netflix 1 month and then you didn't pay it for 2 months, or certain things like your phone bill, if you're always late on your phone bill, if you're always late on your rent, that type of stuff is now getting looked at, right? Because they're cracking down on who is really getting access to credit, right? And everything is about assessing your risk factor, right? So if they can assess your risk factor and they know beforehand what they're gonna get with you, the more likely you will get approved versus you getting denied, right? But if they pull your credit report and you just look like you just got collections, you got bankruptcies, you got repos, you got late payments, and then you go asking them for some money, you probably not gonna get no money. Okay, so let's talk about this real quick, right? Make sure this is here. Please set the frame rate. Where's the frame rate? Listen, I don't know what they talking about. Expand video. I don't know, y'all. It's okay. Settings, stream. I don't know. Let me tell you right now. I just don't know. It's okay. Let's go back. Let's go back. Let's go back. So back to my screen. So let's present this. So assessing capital is basically going to be the art of knowing what the banks want to see from you. Okay, when it comes to borrowing money, a lot of people think that, the banks are just there to hold money. They're just there to, um, charge you to borrow money. But what the banks really are there for is for you to use them as a tool, right? So if you understand what the banks want to see from you, right? Because, like, let's look at it this way, right? Let's look at this as a networking opportunity, right? Or a business opportunity, or a business relationship. Okay, when you want to, show someone your value, right, you have to bring in a few things, right? So I might bring in my pitch deck if I'm trying to start a new partnership. I might bring in my business plan. I might bring in my website. I might bring in my business cards, right? That's going to be the exact same thing, because I know when I'm going to a marketing event or I'm going to a networking event, I know when I'm going to meet other business owners, I want to have a few things on me, right? Or I might just want to, just show up and look the part, right? So I might put on, you might go put on your makeup, you might go put on a suit, right? You might go get yourself all dolled up so you can go represent your business. That's the exact same thing when it comes to getting funded, right? So when you're walking in the bank, make sure you're not in your slippers and you're in your bonnet, right? Don't go to the bank with your bonnet on. And that is exactly what you look like when you come in there with no documentation, when you come in there with bad credit. It looks like you're not ready and it doesn't look like you serious. So when it comes to business and funding, right, you have to understand that it's all about what you have, who you know, what you know, right? So the more you know, the more you can change your life. Okay, so let's talk about this, right? Why do most entrepreneurs get denied? And this is the real problem. Like, people that want to get funded, right, they need to know what the banks want to see from them. So if you're applying number one without strategy, so if, like, for example, right, I'm gonna give you just a quick rundown, right? If I'm trying to apply for something, right, Everything has to have a plan, right? That's why you always want to have things in place before you go get funded. So you better believe you better have your business plan ready. You better believe you should have all these things in order beforehand so that you know what to do with this money, right? And for example, that's what I mean by applying with strategy, right? So for example, if say I'm in the travel industry, right? I know if I'm about to go get some credit cards, I'm probably going to go get the travel credit cards, right? Who do I know I need to go to first? For example, I might go to Chase first because they have the 5 to 24 rule. Now, what is the 5 to 24 rule? If you guys don't know what that means, um, it basically is stating that you can't have more than 5 inquiries on your credit report in the last 24 months or you're automatically denied. So I might want to go get that Chase card first versus going to get that Discover travel card first because now I'm putting myself in position, right? So applying without strategy is going to get you with a bunch of different cards with a bunch of different interest rates, and you're just using them for just different stuff, right? You're not going to know how to use it. So always do everything with strategy. That's why you want to have your business plan. You want to have all these things in order before you actually go to apply for funding. All right, so always apply with strategy. If you apply without strategy, you're gonna put yourself in a mess, right? It's like, you making a cake and you start putting the eggs, you start putting the milk in, and then you might just throw a paper clip in there, and then you start throwing other random stuff in there that's not really like it's not how that works, right? So don't apply without strategy. All right. And that goes with personal funding as well, right? We'll talk a little bit about that here in a minute, but always apply with strategy. Okay. Next thing is going to be your utilization. A lot of people don't understand how important utilization is. Utilization meaning how much of your credit limit are you utilizing. So for example, if I have a $30,000 credit card and I use 3,000 of it, excuse me, let's start over, right? So if I have a $30,000 credit card and I utilize $10,000, I've utilized 30% of my credit. Make sense? All right, is this making sense to y'all? Put something in the chat if this makes sense. Okay, cool. Um, so high utilization is extremely, extremely important when it comes to getting funded. Why? Because banks do not want to see desperation. Okay, so if I have 5 credit cards and they're all maxed out, say I got 5,000 on each of those credit cards. I got 5 credit cards. That's $25,000 I'm in debt, right? So they all maxed out. Then I go ask the bank for a 6 credit card. Number one, it's just crazy because you look desperate, right? You're like, hey, I didn't ran up all this other money. Can I get some more, right? And denied. Okay, another reason is because it's like, okay, if I'm sixth in line to get that money and you working at the Family Dollar, right? I'm probably not going to get that money, right? So it's all about risk factor. Okay, so if you have a high risk factor and meaning you have a higher utilization, meaning it looks like to them like they're not going to get their money back, or they have a high risk of them not getting their money back and denied. Okay, so the next thing is going to be weak business credibility. Again, if y'all want the free business checklist, DM me right now and I'll send it to you. Okay, but the weak business credibility angle is basically saying if you don't have an established business, like I was talking about in the beginning with your address and your phone number, right, that is going to put you behind. Okay, you're not going to get no money if you think that you're just going to put your grandma's address on the LLC and you're going to put your personal phone number. Like, you're not going to get, if you do get some money, you might get some little money, right? You might get a little 500, a little $1,000. But if you're trying to position yourself to get $10,000, right, and you're doing actual business, you need to operate like an actual business. So go get an EIN, go get your DUNS number, go get your LLC or your corporation, right? Go get your phone number, go get your business bank account, go get your business insurance, right? There's so many different things that you need to have to where you're credible and, able to get money, right? To where you can really position yourself to say, hey, I don't really and here's the thing, right? When you're trying to go get funded, it's always like, it always comes down to that personal credit score. I don't care what type of business credit you're trying to get, they're going to ask for your credit score. There's going to be a few times where they might not, they're just going to look at it and see how much money, because like if I'm asking for $50,000 and I haven't had, even $5,000 on the personal side, that is something that they want to look at, right? Because they're like, okay, if you haven't even handled, more than $10,000 on the personal side, what makes you think that this business is, you know what I'm saying? So weak business credibility is always going to get you denied. on the aspect of, if you want little money, go put your grandma's, and even if you're like, here's the thing, if you're working at a home, right, if you have a work from home business, there's nothing wrong with putting your home business, but make sure everything else is structured in the way to where it looks right. Okay, make sure when you're posting your content, you're like, hey, I work at home. Look at my desk area, right? Make sure when you are, trying to apply that you have the right NAICS code. Make sure you have the right SIC codes, right? Make sure you're knowing what the banks want to see and how a actually credible business is ran. Okay, because a lot of people run successful six-figure businesses outside of their home. Okay, so that's really important, right? Weak business credibility will always get you denied. Okay, reporting errors, meaning if you got bad credit, you're not gonna get good rates. Okay, you can 100% get funded or get business credit or get personal credit if you have bad credit, but it's gonna be more expensive because guess what? You got bad credit. Okay, and then no funding sequence. That goes back to applying without strategy. So again, let me bring back up the travel agency example, right? So banks don't deny people, they deny risk. So if I'm saying, I want to go get these funding cards, or I want to go get these flying cards, I want to get these travel cards, and I'm just going all over the place just trying to figure out which one I could get approved for, is going to set me up for, you just look scattered. You don't look like you have a plan, you don't look like you know what you're doing, right? So always have a sequence, always apply with strategy, know high utilization, pay that thing down, and get your business set up and correctly, okay? Again, funding is about positioning. So you want to position yourself as a worthy borrower. Okay, and what is a worthy borrower? A worthy borrower is literally like every single institution, every single credit union, every single bank, every single lender, they have different requirements and regulations. But for the most part, the basics are these five things, or these four things right here. There's something else on here that I'm going to bring up that's a little bonus. Okay, so lenders evaluate these five core areas. I'm gonna give y'all four right here and then a bonus, right? And reporting accuracy is the most important. Okay, so funding is extremely strategic. Okay, so the first thing that these are the basics. I don't care whether you want $500 or you want $500,000. These are the things that they're gonna look at when it comes to your personal credit score. So your payment history. Do you have payment history? If I am 19 years old, I ain't never had a credit card, and I go ask the bank for 50,000, most likely they're gonna say no, versus someone who's 50 years old who has $20,000 in good debt or in credit card debt that they've always paid off, never had a late payment, right? And they have 10 years. They say they've had those credit cards for 10 years, right? That lets me know as a lender that you know what you're doing, you know how to budget, you know how to handle your money, versus the 19-year-old who has no credit and doesn't have any history. I don't know what's going to happen, right? So it's all about, remember what I said earlier, remember what I said on this last slide, banks don't deny people, they deny risk. Okay, so payment history shows your risk factor. Utilization, we already talked about utilization. If your utilization is too high, right, you are not going to get funded. I've seen people have great payment history, great age of accounts, great credit mix, no inquiries, no bad stuff on their account, but their credit cards are maxed out, or they have loans or personal loans, and that can affect your debt to income ratio, which is something else that is always uh, taken into question when it comes to whether you're getting funded or you're not getting funded. But utilization is going to put you in position. So if you have high utilization, please pay it down, right? Because you're going to save yourself a lot of denials. All right, next thing is age of accounts. So payment history. Payment history is, I kind of mix these two up. Excuse me, y'all. Hey man, I've been grinding. I ain't had much sleep lately. But payment history is gonna be, do you pay on time? Like, do you not pay on time? Do you pay on time? Do you not pay on time? Now, age of accounts is kind of what we talked about. All right, do you have, good credit? Have you had it for a long time versus you not having good credit, or you not having any credit, right? So if I can see your age of accounts 2 years or older, that's putting me in position, right? Because it shows me that you've done this type of thing before. Okay. Oh, excuse me, y'all. Next thing is going to be your credit mix. All right, now credit mix is extremely important as well, right? Now your credit mix is basically exactly what it sounds like, right? How much diversity is on your credit profile. So if you got a mortgage, you got an auto loan, you got a personal credit loan, you got personal credit cards, you got charge cards, you got your rent being reported. That again shows a healthy credit report. So a healthy credit mix is going to put you in position, and it shows that you can handle money, right? A lot of people think that, just because they have a 700 credit score that, they're already set. Now, here's the thing. You can have one credit card, one account, right? Reporting on your credit card, and you've paid it positively, and that'll boost your score up to a 700. But what that doesn't show is, it doesn't show credit mix, it doesn't show age of accounts, it might show your utilization, and it doesn't show payment history. Okay, so I don't want to be a rookie. I don't want to go in the bank saying, hey, Mr. Banker, I've only had a $500 credit card. Can I have $50,000? That's not how that works. Okay, so this is extremely important. The other thing that I didn't mention is going to be credit inquiries. Inquiries are extremely important. Like I was talking about the Chase 5 to 24 rule. Banks or lenders or whoever's giving you money does not want to see that you out here being thirsty. Okay, so if you are like, you over here trying to go get a credit card from Capital One and you get denied, then you go to Discover, right? Then you go to Navy Fed. Then you done did all this in 2 months, and now you coming to me? Nah, you ain't denied. Okay, so funding is about positioning. So position yourself to be a worthy borrower, and remember, banks don't deny people; they deny risk. All right. So let's talk about something else, right? Hold on, real quick, y'all. Let's talk about something real quick. Let's talk about. It's okay, y'all. Even if they ain't watching, they gonna see me. All right. Um, so let's talk about credit, right? When it comes to credit, I know what y'all thinking, like, okay, how do you get good credit, right? But credit is built on federal consumer protection laws. So you have these laws right here in these acts, that we can leverage. Okay, so the Fair Credit Reporting Act basically talks about how credit can be reported, who can report, what they can report, when they can report it, and what rights you have. And when it comes to disclosures, when it comes to your consent for certain things being on there, the compliance standard, all that stuff is in the Fair Credit Reporting Act. Okay. Now, the FDCPA, the Fair Debt Collection Practices Act, again, is exactly what it sounds like. So how is debt supposed to be collected? Who has the authority to collect it, and what are the procedures when that type of thing happens, and what can and cannot happen as far as communication goes? The Truth in Lending Act. This act was started, you know, because like it started with mortgages, right? So it started with people trying to, they just wanted the truth about interest rates, right? There's a lot of predatory lenders out here. Okay, I'll give you a perfect example of a predatory loan. So the first thing is going to be merchant cash advances. Has anybody heard of a merchant cash advance? Excuse me, a merchant cash advance. Has anybody heard of that? MCA? Okay, so basically what it is, and these are used for certain industries, for example, like a trucking industry, where you have daily deposits, right? So a merchant cash advance, say you're making $10,000 a day, right? That merchant cash advance is going to give you an advance on that money, right? But they're going to take their money out every single day. Okay, so you can get an advance on that money, on that 10,000, that $50,000, but they are literally going to be taking money out of your pocket every single day. Okay, so a lot of people get in these contracts, and they don't know what happens if they need to sue, or they don't know what's going to happen if they, the person who, the lender or whoever, extended them that credit, they don't know that, something's been changed. It's in the arbitration agreement. All that type of stuff has to be, obviously the truth. So that's what the Truth in Lending Act has to do with, right? Fair and Accurate Credit Transactions Act. This act was basically, put in place to make sure that, credit transactions are, logged in the right way. And then there's oversight by the CFPB, the Consumer Financial Protection Bureau. This is the big boys. So this is where we go if we have complaints on the credit bureaus or the consumer reporting agencies. Okay. Now, why does all this matter? Well, few things. Financial institutions are heavily regulated, meaning like there's so many different laws and things that are put in place to make sure that things go smoothly and things are fair and people have access to things. So this is people's money, this is people's livelihood in some cases, so it needs to be taken seriously, right? So financial institutions are heavily regulated for, good reason. Supervised under federal and consumer financial laws. So compliance matters because it's federal consumer law. Okay, that's all we gotta say, right? And reporting must meet legal standards. Like if you're reporting stuff and it's wrong, or you're reporting stuff and it's inaccurate, or I've told you I want you to, reinvestigate this, and you just tell me nah, it's coming back verified, right? Um, this is why these acts back here matter. This is why this stuff matters, because these things do tend to happen. Okay, so you have rights. So let's talk about what the banks actually want to see from you. Here's a quick little checklist. So the first thing is going to be a 680 plus FICO score. Okay, it's a minimum for prime programs. I've seen, somebody get a funded with a, I think it was like a 530 at the time. Okay. But there's so many different ways to get funded. There's so many different ways to skin a cat. So if I have, a 700 credit score, I can go run some plays, versus if I have a 500 credit score, I can still go run some plays, but it's going to be a little bit more expensive. So utilization, I know what like, okay, like what is utilization? How do I pay it down? Just pay your credit card off under 0 to 9%. Okay, most people will say it will go all the way up to 30. So don't think that just because you spent that little 6-7 thousand, or you spent that 12,000, that is gonna hurt your score as much. But utilization does make your score go up or down temporarily, because it's the biggest thing that fluctuates. If you think about payment history, that has to occur every 30, 60, 90, 120, and so on days. When you think about credit repair, or you think about utilization, right? Your utilization can go down if you spent $500 today and you didn't pay off your credit card, right? Versus you paying off $500, now your score goes up. So ideally, position yourself between that 9 to 30% range. Okay. No recent late payments. So in 12 to 24 months, you need to get that cleaned up. Low inquiry velocity. We just talked about that. Okay. So make sure you have at least, no more than 2 to 3 inquiries on your report. All right. Um, Stable income, of course, it's always stable income, but is it, the type of work that people want to do? Probably not. Okay. And it's revenue consistent. So strong debt to income ratio. Always got to have your DTI under 40%. So if I own a house and I own a car, so if I'm renting my house, I'm renting my car, I'm, paying for food, I'm renting, all these different things, and I'm spending all this money, it has to make sense. Okay. So that's basically what DTI has to do with it. So why does your personal credit matter in this? So basically, personal guarantees are required to for business. Personal guarantee is required for most business funding, which is crazy. Lenders pool personal credit before your business credit. So if I'm a lender and I want to pool and I'm gonna give you some money, for the most part, I'm gonna look at your stuff and I'm gonna go to your pages. I'm gonna make sure that you're A1 before I try to hire you, right? And your score determines your credit limits, your increase rates, and your approval odds. I've seen people be, strung out for 30 years and then they get on this tip, right? And they're like, okay, I know how to play the game. Let's do it, right? So let's talk about how to position your personal credit for funding. This is the PrimeBridge positioning strategy. So keep your utilization under 10% before applying, obviously. Allow balances to report low. Boom. So that means stop, when your balances are reporting low, right? Stop running your credit card up before that statement date comes back out if you know you can't pay it back off. All right, so stop letting those account. But here's the thing, right? If you will let a balance or an account run too low, right, they think you're not using your credit, and they don't want to give you credit if you're not going to use it. So if you have a $50,000 credit card and you only use like $300 of it, they're going to be questioning that, right? Do we lower your limit, right? Do we close the card? And then you have avoid applying with for random accounts. We keep talking about this. Stop trying to go work where your cousin works, or stop trying to go where your coworker who you worked with at your last job working. Now she over there. No, we're not doing that. Go find people who are really going to put some money in your pocket and invest in you as much as you're willing to do that for yourself, right? um Age accounts strategically. Again, we just talked about that. Remove inaccurate reporting under the CRA. We just talked about that. Okay. So here's the thing. When we leverage personal credit for business growth, a few things are going to happen. We are going to, number one, be looked at crazy, right? Because we really that. Um, but we're also going to be kind of in disbelief because this is going to be something new, right? So this strategic leverage model is going to entail 5 steps, right? So the first thing is optimize your personal profile. What does that mean? That basically means make sure that, on your personal profile, you only have one address. You got one, like, you don't need to have 16 addresses on there. That just looks crazy. You don't need to have two different names on there. You don't need to have things that aren't even supposed to be on your credit report on there. So always pull your credit report. If you guys want to find a free site to pull your credit report, write this down. It's going to be called annualcreditreport.com. I'll say it again, annualcreditreport.com. Okay, you can go there. You can pull your credit profile every 7 days for free. Okay, now those approvals, between the jumping, right? I know y'all seen that. I know y'all seen that. But basically, right, you want to stack approvals within 7 to 14 days. Okay, so make sure when you apply, you run the play. You got all your inquiries down. Now you go run the play. Get that money fast. Don't let them wait. All right, because the more they wait, you wait. Okay, so move capital into business operations, meaning just pour more money into your business. Everybody has well, where do I get the money from? Find it. There's so many different ways to find money everywhere. Okay, then you transition into EIN based funding. That's basically saying, hey, my EIN is basically going to act as my business's social security number, so you can put everything in care of my EIN. Okay, so that can basically get you some funding too. Okay, so what gets higher limits, right? I've seen, I was just talking to this young lady the other day, and she was basically telling me, like, hey, I have a credit card. I've had it for, 6 years. I think she was like 27 at the time. And she basically asked me, hey, can you help me out with this? So I came and helped her out. But here's the thing, like, she asked me what I wanted to be when I grew up, right? And I said I wanted to be rich. But I don't want to be this rich, right? Because banks reward these behaviors. They also reward bad behaviors, but we're not gonna get into that. But let's talk about what's gonna get you those higher limits, right? What's gonna get you that $20,000 and you started at 5K, right? Let's talk about that. So existing high limits, it's gonna get you there. Low utilization, it is going to get you there. Long standing account. So if you had your account for 10 plus years and you just ain't really used it much, rebrand yourself, right? Go get them accounts going, because they are going to look at your website. They are going to try and call your phone number. They're going to do so many different things that you got to be able to be on defense and then know when to get on offense. All right. So just think about that, right? And, obviously clean 24-month payment history, right? Don't play. Now, business credit. What is business credit? Okay. So, step one of business funding, right? So, you got to have that credibility again. Proper entity structure. So, you need to be structured out. You need to make sure you got your address. You need to make sure that you are in a professional setting and a professional place and get some things done, right? So, y'all got a poor entity, serious signature struggle. I don't even know what that means, but like, That's the reality. Okay, so EIN and business bank alignment. So when one person is doing the other thing and the other person doing the other thing, there's most likely another person that comes in and do what needs to be done, right? So always understand that, always understand that when you're making money and you're trying to get into business credit and you're trying to figure out how to fund your business, right? Your EIN and business bank alignment is going to put you in position, because it's basically like they say your business is not open until you have a business bank account. Okay, so that EIN is going, and you can't open your business bank account without an EIN. Remember, your EIN is your business's social security number. Okay, so keep that in mind. Professional address. You can go get a professional address anywhere. Okay, just make sure that you scan things and you do your research and you know what's going on. Okay. Industry classification. That's the NAICS code, SIC code. Again, if you guys want to learn more about this stuff and you want to see the ins and outs, it's to get your LLC set up with this checklist, it may take you 15-20 minutes because you're really doing your due diligence. Okay, so understand that. Website, email, domain, credibility. We talked about that already. Like, you just gotta have it, or you ain't gonna have nothing. So what type of business credit is there? And I know we talked about, how do you fund? Well, where do you know, and you're like, where do you go to get the funding? So you want to build this in layers. So vendor tier. What is vendor tiers? So vendors are going to be you getting stuff from individuals, right? So you may go to, uh, the you may go to a store and you see a vending machine, right? That type of thing, right? You're getting very automated stuff, right? So you might go to a Granger, you might go to, other places like that, right? And just order toilet paper or something like that. That can be counted as vendor tier. What's that other one? It's You can go get office supplies, right? So vendor tier can be important. Okay. Then you got store tier. Store tier is exactly what it sounds like. That's the Office Depots. That's the Walmart business. So all these business credit strategies, or all these types of business credit is going to put you in position. So always get those small vendor tiers. Get one or two of these. Get two, I would say about two of these store tiers, right? So go get the Walmart business card. Go get the Sam's Club, right? Get Sam's Club membership for your business, right? And that way you're gonna pay it off. Because think about it, if I'm going to get toilet paper with the store card, right? I'm going to get, $50 worth of toilet paper, right? I know I'm finna pay that anyway. So instead of paying my cash, I'm gonna put it on my credit card, right? And I'm gonna make the money work for me, because that's gonna put my foot in the door for my business to get a paydex score. Now, what is a paydex score? Your paydex score not exactly, is going to be your business's credit score. Okay, so personal credit scores, FICO scores, can go all the way up to 850. Business credit scores only go up to, I believe it's 80. All right, it might be 90. So when you understand that aspect of it, start building your score up quick. So go get you some of that little stuff, right? You're gonna spend the money anyway. Make it work for you. Go to the stores, do the same thing. Now, fleet tier. What is fleet tier? So this is basically, you can go get gas cards, right? That's probably the most common, right? Go get you a little gas card, pay the little, fill your tank up whenever you need to, and then pay it back down to that 10 to 30%, right? Um, and then cash credit tier. That's when you get, like, again, merchant cash advances. You get them big bucks, okay? Might get paid for a booking or something like that, right? Now, let's talk about what, if you work with me and my people, what we give, right? So we help you get access to 0% interest business credit cards, and that is going to be the form of stacking. Why do we want 0% interest? Obviously, because we don't want to pay interest, right? But here's the thing, right? When it comes to being strategic and we really want to run a play. So if I want to get a 0% interest credit card, say I get a $50,000 credit card with 0% interest for 12 months, right? Hint, hint, the Amex card, right? So you go get one of them little Amex cards, and you put yourself in position. You got 50K to run plays with for 12 months. That means you're not going to have to pay nothing other than what you spent for 12 months, y'all. Okay, so 0% interest business credit cards are putting you in position. Okay, so we can get you access to 25 to 100K. Let's just say we get you 12K, right? We gonna run it back, okay? Equipment financing. If you have a business to where you need to go get computers, you need to go get chairs, you might need to go get printers, all that type of good stuff, right? We can help you get that as well. Term loans. Term loans are going to be just a loan on the term, right? So it's very, very customized. And hybrid funding strategies, you got to hop on a call so we can break that down because that's something I could talk about for a long time. Okay, so let's get back to that strategy. The funding sequence. Timing matters. Make sure you know when you're actually like, for example, like Discover. You want to you want to apply for a Discover card in between the hours of 11 a.m. to 4 p.m. Now, if it's Navy Federal and you want to get in their system, you might want to wait till they close and go on like a 8 between 8 p.m. to a 12 a.m. In the morning time and try and get yourself funded, right? But that's always, it's just a little stuff, right? Profile audit. Always audit your profile. So always pull your credit reports. Like I said, if you guys want to pull your credit report every single week for free, that's all three major bureaus, TransUnion, Equifax, and Experian. You can go to annualcreditreport.com and get your reports for free every single 7 days. All right, y'all, it don't get no better than this. Who's giving the game out like this? Optimization. Make sure you're optimizing. So if you got credit cards, use them. All right. Application sequencing. Make sure that you're going in the right direction. Make sure you know that you're going for 0% interest. Make sure you know that this is the card that you need first, right? So if you're trying to get marketing done first, maybe go for a card with a higher limit, so you can run your bag up, right? If you're looking to, like, for example, we could go back to the travel stuff again, right? If you're looking for something that more is leaning towards free flights and airline tickets or hotel stays, you might want to go with a Discover card, or you might want to go with a Navy Federal card or an Amex or a Chase versus going to, someone who's trying to do like a automobile, like even an automobile business. Say you're like doing, say you want to go get a car lot. Say you want to, do rental cars, right? You might want to go to like a Navy Federal, or you might want to go to an Alley because they specialize in giving out auto loans with high limits, right? And low interest rates. So application sequencing is extremely important, right? And capital deployment strategy, basically what that means is, when you get the money, what are you going to do with it? So whenever you're trying to go ask people for money, you better believe they want to know what you're going to do with it. If you are asking me for 50K, like, you ever ask somebody for some money and they be like, for what? You know what I'm saying? Because we want to know what you're doing with the money, right? I want to make my money work for me. So always have a deployment strategy. So when it takes off, it has strategy and it's doing what, the machine that you made is working the way you want it to work. Okay. Now, when you want to audit, and I can help you audit your credit profile, see what you are, see what you're able to get, and we can get that going as well. So DM me if y'all want help with that. But let's talk about what you need to analyze. So your personal credit structure, we talked about that. We can go all the way back. This is your structure right here. Keep your utilization between 10% before applying. Allow businesses to report balances to report low. I don't think I really dove into that a lot. So when it comes to allowing your balances to report low, you have two types of dates. You have your statement date and your payment due date. All right, your payment due date is when you pay to make sure that your account stays in good standing. Now, your statement date is what matters to the bureaus or what matters to the lenders, because that's what comes out when, so like, well, your statement date comes out on usually the 25th, right? For most, it's between the 25th and the 28th. And that's basically going to have all of your activity, right? But what it does is, if you pay off your credit card before the statement date versus the due date, right? Your payment due date, right? That's going to reflect on your credit report. So always make sure, if your due date is, your due date is always going to be before your statement date comes out, right? Because your statement date comes out every 25 days. So if you pay off your credit card or your credit cards before that statement date comes out on the 25th or whatever date it is for you, right? Always make sure you know that. That's something that's very important, right? That's what affects your credit score. So if I pay my credit cards off before the statement date comes out and I pay it under this 10%, right? And I say I ran it up, right? Your balance is going to report low versus me making a $700 payment on a $1,000 credit card, trying to get it below 10 to 30%. And then it's after that statement date. So now it doesn't matter. It's going to still report as, whatever it was before that statement date. So always allow your balances to report low. So if you then paid your credit card off on the 18th, right? Make sure you allow it to report low before you go and apply for funding. Okay, so don't go apply for random accounts. Obviously, age accounts strategically. Again, remove inaccurate reports. Right. So your sequence is extremely important. So when you're auditing your credit profile, those are the type of things you want to look at. Right. Business credibility. Again, if you want the free business checklist, DM me. Hit me up. I got you. All right. Um, Utilization, very important. Reporting accuracy. So if you are a victim of identity theft, that type of thing, is going, again, things that you need to look at before you go ask for funding. Okay, so that's basically what I wanted to talk about today. If y'all learned anything today, please drop some in the chat.